Now, we are aware that the lower tax landscape, as we know it, is due to change in 2026. That is when the Tax Cuts and Jobs Act is going to sunset, which means ordinary tax rates are going to increase to what they were in 2017, which is higher, and the estate tax exemption is going to be halved. And who knows what a divided Congress is going to do. At the minimum, that is going to happen, but it could go up even higher. Doesn't this make the case for good tax planning sooner rather than later?
Yeah, I think that people should be looking at tax planning every single year. I know towards the end of the year, we were talking about a strategy called tax loss harvesting. Also, what a lot of retirees are not aware of is in December of 2022, they passed a new law. It's called the Secure Act 2.0. And so if you look at some of the changes, there are changes that impact retirees with the Secure Act 2.0. If you missed that previous edition, you can just cruise over to our YouTube channel. On YouTube, type in America's Retirement Headquarters, and you can see some of those recent changes in the Secure Act 2.0 or that end-of-the-year tax loss harvesting strategy. Great resources over there. I'm kind of biased because we produce them. But sure. When you also look at it, the things that are important for people that are close to or in retirement time is one is understanding the impact of like Social Security taxation. So most of us who are working, we're used to what is called ordinary income, our tax brackets, and that's what they're talking about, changing. But another tax that many retirees get caught off guard and end up maybe overpaying on is Social Security taxes. So up to 85% of your Social Security benefits can be taxable. And then the decisions you make with that, Scott, wouldn't you agree, can impact not only taxes, but also can impact your health care costs?
Absolutely. I met with a client this past week, and they were asking a question. They've got some income coming in. They were contemplating taking their Social Security at 65, and they asked me some questions on how much money they can earn, without... And they understood a little bit about the taxes, but they didn't really understand exactly what they should do and how they should choose whether or not to take Social Security prior to the full retirement age, and theirs happened to be 66 and 7 months. So it all depends, and that income levels can definitely impact the healthcare cost and what you're going to end up paying based on how much your income is during that, whether it's under 65 or whether you're eligible for Medicare at 65. So I know that's one of the things that, Chaz, you do a great job with helping, the Social Security and helping clients understand what's the best option for them. Yeah. And everybody's different. You know, what's good for you may be bad for me.
Right. And that case that we worked on together, which I was really proud of that, in that we were able to save one of our clients quite a bit of money, and sure. Stop me if I'm wrong, but I think it was close to maybe $400 or $500 a month just by us discussing what the threshold of income is
Absolutely.
That the client could earn, and then having me go back to the financial plan and structure the withdrawal sequence. Are we taking money, and how much are we taking from after tax dollars like Roth? How much are we taking from taxable dollars? And so again, that having that comprehensive approach with an advisor and an insurance and Medicare specialist in the office, I think, is invaluable, because if just left to your own device, you take whatever plan popped up on the online questionnaire, and you're paying an extra $500 a month. So that is a really great case to bring up, and I'm always it's an eye-opening experience when we talk about taxes with clients, because of all of the misconceptions that they have. One, primarily, like you talked about, Nolan, being Social Security taxes. Oftentimes, some of our retirees don't know that Social Security is taxable. I've had that come up a few times. But more common, what people generally feel is that they're going to be in a lower tax bracket when they retire. Mm-hmm. And after doing the research and building out their financial plan, we found that that's not always the case. Primarily because when you hit 73 now, you're going to have to start taking required minimum distributions, which, depending on the size of your nest egg, could be a lot of income. And so that, on top of your Social Security benefits and then any other income that you have, we found generally folks are in a lot higher tax bracket. And so doing some planning, maybe it makes sense to pay tax now. Taxes are kind of on sale. I think a lot of people would agree. So
it is. It's a great time to take a look at, minimizing the taxes that you pay now. So if you feel that your family's tax rates are going to be higher in the future, here's a couple of different takes away based upon what you guys just said. No, first and foremost, I would say that you want to get a 2023 tax roadmap. And now, we are not CPAs. We're not accountants. Of course, before you ever make any tax decisions, always talk with your accountant. We'd be happy to discuss planning with your CPA or accountant. If you don't have one, we'd be happy to introduce you to a couple of ours that we work with. But you want to have a tax roadmap. Now, most people about this time of year, they start gathering up their tax documents to turn in, and they're filing last year. So that's what history is. The tax roadmap is saying, what can we do in 2023 to reduce the amount of taxes that we pay now and in the future? And that's what our software can do when we run a tax roadmap for you. So if you haven't got a tax roadmap, we'd encourage you to get a hold of our office. In fact, we'll continue on that offer. So, for the first 5 people that call up that need a tax roadmap this year, if you want to look, are there ways that you could look at possibly reducing the amount of taxes that you pay? Call our office. We'll get you a tax roadmap. We'll show you what our thoughts are on it. If you want to learn more on this topic, your action item here is to sign up for one of our February events. So February 15th at 11:30 a.m., we're doing an event over at Red Lobster there in Maumee. It's on the 5 threats and opportunities facing retirees, and taxes is one of those 5 threats that we'll be talking a lot more about on that topic. Or if you want to come over to our dinner event, it's on February 15th. It starts at 6 p.m. It's at the Urban Pine Winery, so the new winery that's here in Maumee. Also going to be discussing those 5 threats and opportunities facing retirees. So a couple of action items and a couple of takeaways on what you can do to implement some ideas if you're looking to try to minimize the overall taxes that you pay for this year and also in the future. And if you're not familiar with those new tax laws that just went into effect, those secure tax law changes, just remember that we've got a lot of great resources up on our YouTube that talk about tax planning for retirees.
It's one thing to know that taxes are almost certainly going to go up in the future. Again, even the Tax Cuts and Jobs Act sunsetting is going to be a reversion and taxes are going to go up at that point. It's another thing to actually do something about it. What can you do? Well, as Nolan pointed out there, attend these upcoming classes and workshops happening on February 15th. You can find out more information, including how to reserve your seat at arhq.com, or take advantage, be one of the first 5 callers and have that tax roadmap done. Give a call, 419-794-3030. Once again, 419-794-3030.